Hey everyone, Couch Investor back to another video for you today. So we're gonna have a look at AMD's earnings report. If you just want to hear the top and bottom aspects here, so they beat on board where they actually met the expectations, so that's great. Now, 2 days ago I made a video about AMD and what to expect after that Intel's earnings report, and I said that one segment will get hit, will slow down even more, and that's exactly what happens. Obviously, if you've seen that video, you know what I'm talking about, but currently, the market enjoys this report, another strong quarter for a very well executing company like AMD. I believe it's up 3.5% or so at the time of making this video. So we're going to go over the key numbers in this video. Obviously, do share your thoughts down in the comments below. Leave it a thumbs up, subscribe if you have not. I would really appreciate that. After this video, I'm going to have a look at Snapchat. Why is that? Why am I still looking at Snap? Well, because of its effect on other companies in the advertising space. Not surprised to see the stock down around 10 to 13% or so. But going back to AMD. So these are basically the headline numbers, and then we're going to have a deeper look into some other ones. So as you can see right here, data center revenue, unlike with Intel, this is up 42% year over year. It has reached $1.7 billion. Last quarter, that was 1.6. So a small increase here quarter over quarter. Now, client revenue, this is the segment where I said in my last video, this is the segment that Intel also said that has taken the biggest impact. You can clearly see it here. It's down 51% year over year. It's also down quarter over quarter from $1 billion. Now it's at 903 million. Okay, this was to be expected. Gaming revenue is flat quarter over quarter and down 7% year over year. Again, my prediction here is that the second half of 2023 for these two segments right here will be much better. And then, of course, the embedded revenue, this is through the acquisition of Xilinx. So you can see here this huge increase year over year. Disregard that number, just look at the $1.4 billion in revenue and then keep track of that number, because obviously year over year, that comparison just doesn't make any sense. Now, quarter over quarter, that's up from $1.3 billion. So, okay, nice little increase there. So overall, revenue came in line slightly above expectations at $5.6 billion, so a 16% growth year over year. Now, before I continue, if you want to support this channel and myself a bit further, do check out the links down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to full.com/couchinvestor. Make sure to check out all the other links in the pinned comment as well, and subscribe to this channel because we're going to go hard during this earnings season. Now, let's go a bit deeper into the numbers. We're going to have a look at the non-GAAP numbers because those are usually the ones that we went through when it comes to AMD. Of course, when you see things down here, well, on a GAAP basis, it's down much more. So net income, operating margin, earnings per share, that's down a lot year over year. So just for the sake of this video, let's look at non-GAAP. As we've seen, revenue, that's up 16%. Now, gross profit is up 18%. Always nice to see on a non-GAAP basis, obviously. Gross margin for this quarter, 51%, in line with their expectations. For the full year as well, 52% gross margin, so in line with the expectations there as well. Operating expenses is up 45%. Operating income on a non-GAAP basis is down 5%. Operating margin is down 4 percentage points. And then net income remains flat-ish. Earnings per share is down 25%. So yes, of course, with the cyclicality of this business, of this industry, then yes, profitability is taking a hit right here. We've seen this across the board, so no surprises there. Then when it comes to the full year 2022, so on a GAAP basis, it's up 44%, same thing on a non-GAAP basis. When you look at gross profit, it's up 34% on a GAAP basis and 55% on a non-GAAP basis. So for the full year 2022, when you look at, well, let's say profitability of this business, on a non-GAAP basis, it has gone up. As you can see here, operating income is up 56%, operating margin 2 percentage points, net income up 60%, and earnings per share, that's up 25%. But on a GAAP basis, those numbers have taken a hit. So yes, that effect, especially in the back half of 2022, obviously weighed down hard on, well, the GAAP side of the accounting here. And this is exactly what Lisa Su says. 2022 was a strong year for AMD as we delivered best-in-class growth and record revenue despite the weak PC environment in the second half of the year. Again, I repeat myself, I think the second half of this year, 2023, will have the inverse effect. So will be much more positive for a business like AMD, even Intel, and probably Nvidia as well. Now, with regards to some outlook here, of course, we're going to have a look at the outlook numbers. So she says here, although the demand environment is mixed, we are confident in our ability to gain market share in 2023 and deliver long-term growth based on our differentiated product portfolio. Again, I have no doubt that they'll execute their roadmap correctly. They've been doing this for a couple of years. So right now they've been navigating that weird environment as well. Pretty good. Now for the first quarter of this year, AMD expects revenue to be approximately $5.3 billion plus or minus $300 million, a decrease of approximately 10% year over year. Don't worry, this is because Q1 last year was extremely strong. And yes, if you're following the numbers here, this is a decrease quarter over quarter as well. So basically what Intel said, what Pat said is true. First half, especially Q1 for 2023, we'll see a continued weakness in the market. And we can clearly see it right here. Now, year over year, the client and gaming segments are expected to decline, partially offset by embedded and data center segment. AMD expects non-GAAP gross margin to be approximately 50% in the first quarter of 2023, so they expect to take a 1 percentage point hit. Okay, to be expected, not that dramatic. Again, that just shows that this is a very robust business. Certainly if you compare AMD's report and outlook to Intel's, well, two sides of a coin here. Now, I don't usually do this, especially not during earnings report videos, but since I looked at the graph before, I thought this was interesting, especially for those that like technical analysis. So as you can see right now, after that earnings report, we are nearing the 200-day moving average. So keep an eye on this activity right here. Again, this is on the weekly chart. If that candle becomes a big green one and goes over by the end of the week, listen up. Wednesday, we have the Fed meeting. We're all anticipating that 25 basis point rate hike, but especially what he's going to say in his speech. So keep a real eye on what happens here for the technical analysis people, because we are reaching a point of, well, could see it go much higher, especially now that we've seen the numbers for this quarter and the expectations for Q1. So overall, to conclude, expectations were met. My expectations were met. I think we can all agree that we knew what was going to happen with client and gaming, and we've seen data center, great. Their expectations, their outlook seems in line with everyone. So again, a pretty boring, let's say, earnings report, but right now boring, in my opinion, is pretty good. So I think all AMD shareholders should be pretty happy right now seeing this. As for an Intel shareholder, probably you're looking at AMD right now and saying, why hasn't Intel, well, changed its management years ago? This is how it is right now, but hey, overall, do share your thoughts down in the comments below. Stay tuned for the Snapchat video later today or maybe tomorrow morning. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.